right, let's begin, folks. Let's begin. Let us begin the show that we deserve. The show that we deserve. Are you ready? Let's go. Let's go. We're ready. Oh, it seems like I didn't go live on LinkedIn. Just 1 second, folks. Just 1 second. Yeah, I'm live on LinkedIn as well. Are we ready? Are we ready? Vincent, are we happy? Hell, we are happy. Pulp Fiction. Pulp Fiction references never get old, yeah? Have you watched Pulp Fiction, folks? Royale with cheese. Royale with cheese. Yeah, so we're ready, folks. I should just check myself on LinkedIn and on YouTube. So I am audible on, yeah, I'm audible on YouTube. Fiction, folks. Yeah, I'm audible on LinkedIn. So let's begin. The show that we deserve. The show that we deserve. It's that good. We can't take a break. It sets us up in the morning, right? Inspires us, informs us, and helps us seize the day. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, says Mr. Sumanth Kumar. Good morning, Mr. Kumar. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go. But before we go, we have the sacred tradition, right? Gotta follow the tradition. The sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Ah, beautiful. Let's do it again. Wonderful. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we're in this together, which is such a beautiful thing to say. With that out of the way, let's begin, folks. Very weird situations. Of course, if you talk about geopolitics, China and Japan are seemingly heating up. China has blocked some of their exports. It's blocking their movie releases. It says if Prime Minister's statements about Taiwan aren't revoked, there'll be serious countermeasures. Serious countermeasures, that's what China is saying. At the same time, the Russia-Ukraine conflict is spilling over all over Europe. UK says that their waters are getting touched. While Ukrainian president, or is it prime minister, President Zelensky, he is out in Turkey to talk about a peace deal, right? Russia is hammering Ukraine on the borders. So that's going on with Russia, Ukraine. Of course, the whole Pakistan, China, and India nexus is also at play. There is news that the whole Rafal disinformation campaign was actually spearheaded by China, so that it could sell their J-35s instead of Rafale. So they were defaming, they were actively defaming uh, Rafales with the whole Rafale got shot down campaign, just so they could sell better their planes, right? The JF-35s. Uh, and nobody's surprised though, but it's out in the open. And you know who came out with this report? The US. It's a US report which came out this particular news. So that's what's going on with India, China. At the same time, India, China, and Russia are uniting for the global economic affairs, right? So it's very, very weird, the whole situation. It is just not worth talking about, let's say. How does that feel, folks? How does that feel? By the way, Nvidia's earnings came out and they were good, but Dr. Michael Burry has stated a lot of problems with the Nvidia earnings, right? He's written some fabulous tweets about how it doesn't, it has led to a net loss for people when it comes to outstanding shares and stuff. So he's, of course, very, very bearish on the whole situation. He says that there is a lot of circle jerk going on, right? The cross transactions that we keep talking about amongst the AI players. And he said, OpenAI is the linchpin here. Can you tell me who their auditor is? OpenAI, the linchpin of the whole AI bubble. Now that is, I agree with that. I agree with that. OpenAI is the weakest link when it comes to the whole AI bubble play. And if that goes bust, everything goes bust, right? And that is also the most fragile part of the whole play right now. So I'll just read out his tweets for you. Just one second. He wrote a huge piece about the Buffett revisited, right? After years purchasing Apple and so on and so he says early is not wrong. He says every company listed below has suspicious revenue recognition. The actual chart with all the give and take deals would be unreadable. The future will regard this as a picture of fraud, not a flywheel. True end demand is ridiculously small. Almost all customers are funded by their dealers. If you can name OpenAI's auditor in 1 hour, you win some pride. So he says he's clearly very, very solid. He's also mentioned something about one page of Buffett partnership closing letter in May 29, 1969. A year later, S&P 500 was down 30%. A decade later, S&P was down 3.4% from the date of this letter. The purchasing power of the dollar fell 54%, and so did the value of S&P 500 in dollars. So the total inflation included loss for investors over that decade was over 57%, says Dr. Michael Burry. So he's recalling some history when it comes to his play and whatever is happening, right? When it comes to what my problem is with this thinking. You understand that, right? Uh, I have a problem with this thinking. This is a lot like analogy thinking. This is pattern matching. So this is not a good argument for me. Definitely. No disrespect to Dr. Burry, of course, but this is not a great argument for me. A greater argument is when he says, since the beginning of 2018, Nvidia earned about $205 billion in net income and $188 billion in free cash flow. Assuming all capex growth was growth capex, all capex was growth capex, SBC amounted to $20 billion. But it bought back $102 billion worth of stock, and there are 47 more shares outstanding. The true cost of SBC dilution was $112 billion, reducing owners' earnings by 50%. So he's talking about some complex accounting systems, not very complex actually. He's just talking math, plain paper napkin math, which I like. But what I don't like is the whole pattern recognition thing, that this happened in 1969, this happened and now this is happening. This is where the chart fell here. That is analogy thinking for me. personally. So that doesn't fly at all, right? Let's come to nation, folks. Let's come to India. Tata Digital reboot focused on leaner model. So Tata Digital is going for a leaner model, folks. I'll read it out for you. You are gonna have a deja vu. Okay, you're gonna have a deja vu when we talk about Tata Digital's plan. Tighter execution, sustainable growth to mark shift in its operating model under new CEO. Okay, the shift marks a decisive move away from cash intensive model of spreading investments, which left the business overstretched. Instead, the company is focusing on tighter execution, group-wide integration, and financially sustainable growth. Okay, how is it doing is the model hinges on monetizing Tata brand, centralizing group digital marketing spend, and integrating all loyalty programs into a single interchangeable rewards currency. Now, what did I tell you? Does it remind you of anything, folks? Does it remind you of anything? Viewers of Thinkers Frequency, I wrote it first. I was the first one to write anything regarding the folly in Tata Digital's plan, right? That's when they were beginning to spend $2 billion on this whole thing, right? I said this is not going to work out. Those $2 billion are going to be up in smoke. And a better way could be to just build a loyalty platform. Don't you remember that? I said Tata Neu is killing all the brands. It's cannibalizing its brands by keeping this umbrella over the top. Nobody knows New, but people know Big Basket. People knew 1MG. People know Cult. People know all of these brands which Tata paid money for, right? And when Tata comes out with its new brand called New, right, it's essentially hiding all of those other brands. It's taking money away from them. It's taking shine away from them. It's taking focus away from them. It's trying to make a eucalyptus tree, a bunch of eucalyptus trees tied together to form a banyan tree, right? That is the analogy I gave. And I said that there are a lot of problems with analogies, but you do not kill the existing portfolio of brands, right? And try to bring them together, cobble them together, and make one super app. First of all, super apps don't work. Secondly, there is no need for super app, right? People like those brands. Don't kill those brands. What you ought to be doing is launching a separate brand called New, which essentially becomes the loyalty brand, right? The loyalty platform, the discounts, the marketing spend, and so on and so forth. That's what it needs, right? And that is exactly what these guys are coming to do now, right? So they are looking at centralizing group digital marketing spends, loyalty programs. The group has cycled through strategies, senior executives, and so on and so forth. The revenue decline was 13.8% on year, right? 32,000 crores. That's what the whole thing is doing. So I told you folks, I told these guys, they spent $2 billion, right, on this particular play. And after spending like 18,000 crores, burning them to the ground and killing your leadership position, right? Big Basket's leadership position, 1MG. 1MG survived because, Pharmacy imploded. But they did all of that to essentially arrive at what was written. I mean, nobody was reading my analysis, of course, right? But that's what it came to. So how do you feel about that? You were one of the very few people who knew what it's gonna come to. The prediction was absolutely, unmistakably right, right? So that's Tata Digital, folks. Amazing. How much could I have used some of those $2 billion, right? 20 million? 20 million would have been great. 20 million would have been awesome. Anyway, folks, Starbucks to keep growing in India despite competition. Starbucks is looking at India through a long-term lens. Long-term lens, folks. Now, when does a company become a long-term bet, right? When does an investor become a long-term investor? When it gets trapped. Have you ever focused, folks? Have you ever noticed, folks? If you have invested in a stock and it goes down 50%, suddenly you become a long-term investor. That's exactly what a Starbucks situation is, right? It's been here for a very long time. It has a lot of stores in India. Those stores are not profitable. The losses have widened. Let me tell you the exact loss situation of Starbucks in India, right? And then there's a lot of competition, right? So what can you do? You can become a long term. Anyway, just let me. So 500 outlets, 12 years ago. Okay, it is at a revenue stage of, yeah, 1277 crores with a loss of 135 crores. So that's Starbucks in India. A lot of losses. They're calling it that they're comparing it with China. They have 5,000, 8,000, some thousands of units. So there's still a lot of room for growth. What they're not recognizing is that these countries are fundamentally different, and coffee business hasn't worked. So if you look at a lot of VCs and their investments in the coffee chains, right? They've also done this pattern matching thing, right? US has these many coffee chains, China has these many coffee chains. We should have these many coffee chains, per capita coffee chains and stuff like that, right? It's pathetic, and it is proving to be pathetic. That's what it is. Mr. Peeyush Sethi says, I'm usually a long-term investor myself. Well, yeah, I mean, the feeling is not that unfamiliar, to be honest. I cannot claim to be a very, very opposite. I've made some mistakes, and I've also become a long-term investor in the past. So are we all long-term investors here, thinkers frequency folks? But Starbucks anyway is. So that's funny. It is definitely funny. If you're in the long term, of course you're in the long term, man. You can't exit. You're stuck. Now people are gonna be cropping up their coffee chains. You're gonna die, right? And then India is not even a coffee country, and you expand it, and so on and so forth. So let's move on, folks. Kotak and Federal are eyeing two Deutsche portfolios in India, right? Assessment on retail wealth management business done, negotiations ongoing on pricing. Deutsche seems to be exiting on these fronts. Let's see what happens. Kotak and Federal. Uh, Economists are urging RBI to cut rates, right? Uh, Cut rates. So you know why this is happening, right? Of course, inflation is very much in control. Inflation is not going down at all. I'm sorry, it's not going up. The target is 4%. It is right now at 2 point something, which is great news for the country. In some cases, the wholesale price index is in the deflationary level. You don't want that to happen. This gives a lot of room to growth. The room to growth essentially means rate cuts. On December, what RBI's perspective is that we've got to look at the tariff situation also when we're talking about rate cuts and so on and so forth. And when rate cuts happen, right, it's going to be a new phase of growth, but also it's going to shake the bond markets a lot. And that is the balance that the RBI wants to strike. So let's see what happens in December. If India is able to cut a deal with US, and it's a good deal, then you're going to see a rate cut, right? Moving on, folks. Crowded IPOs, sky ratings fees on investment bankers. Investment bankers are responsible for all the IPOs that are going on in the country, right? The IPO market is terribly hot, extremely hot. A lot of good news coming in from all places, right? Who's making money? Investment bankers are making money. No matter what happens to these IPOs, these listings afterwards, right? Whenever it happens, whenever there's a downturn, it's going to be very, very fragile for a lot of companies. But investment bankers are going to be very happy because they've already taken money, right? Lead issue managers likely to have back 3,500 crores from 90 IPO market debuts so far, just this year. 3,500 crores in commissions, folks. That's good money. That's good money. 90 deals. So per deal, you're looking at over about 400 crores. Nice. Nice. Moving on, folks. Moving on. A lot of political chit chat, which we won't discuss, of course. Bank seeks tax stops for raising deposits. NBFCs make case for refinance window. So the chief of SEBI has given an interview, and there's a lot of action about what can SEBI, what can the finance ecosystem, what can banking, what can this and that do. A story related to that is finance minister's pre-budget consultations. Lenders call for incentivizing deposits amid growing concerns over widening credit deposit ratio. Now, why are deposits a problem, folks? Why are they talking about tax offs for raising deposits? Do you know about that? You know about that, right? We've talked about that. You know about that. Why are deposits in trouble, and why do they want government intervention in incentivizing deposits? You can guess why. We've talked about this. I'll take a sip, I'll take a minute, and you can guess why are deposits a problem? Bank deposits. Huh? Nobody? Come on, folks. Come on. Come on. Come on. Equity participation, says Mr. Sumanth Kumar. 100% right. Correct answer. Indians are not choosing to put money in FDs anymore because the equity markets are so hot that they're taking all the money on equities, which is leading to some problems with the credit deposit ratio, right? You have to have deposits. It's a part of the liquidity management, right? Deposits are going low, and that's what led to the net interest margin troubles with the banks, right? Because they couldn't lower the deposits, but they had to lower the interest rates because the rate, the repo rate came down, so they had to lower the interest rate, but they couldn't lower the deposits rates below a point, because below that people just stopped putting in money in deposits, right? And that sort of made it bad for them. However, speaking of banks, folks, you know what the news today says? Bank Nifty tops 59,000 for the first time and can rise some more. Easing of margin pressure and modest valuation sees as factors behind the momentum. Foreign investors also said to be no longer negative on BFSI space. Who told you? Who told you, folks? Do you remember? Like, you knew this about 160 days ago. About 175 days ago. If you've been watching regularly, you saw this coming like 165 days. Nobody said that at that time, but we did, right? Way of the curve. Way ahead of the curve, folks. As that margin call dialogue says, you know why I earned the big bucks, right? Because I look at what the music is gonna be. A day, a week, a month from now. Some cases, many months, right? In our case. Moving on, folks. CAG integrates SEBI's ESG criteria into government audits. Well, ESG, of course, that is a problem. That has always been a problem. That has been some sort of compliance bottleneck for a lot of companies. The ESG play, right? Sustainability and so on. It's going to be a part of CAG's audits as well. Government audits. Moving on, folks. Nat gas demand comes down 15% in October on high international prices. So the heading is that nat gas, high international prices, demand down 15%. But that's not reading between the lines. Actual reading of the situation is that the alternate fuels, the alternate crude, that's becoming cheaper, which is leading to a lot, replacement of natural. So natural gas are similar to where they were last year, but customers find the fuel expensive as crude has come down, right? And that's why falling gas demand has pushed LNG imports down 22%. So that is how the market functions, folks. Moving on. Steelmakers emission targets under review. We've talked a lot about this. Steelmakers emission targets. We've talked about the green, steel manufacturing, the credits, the sink heat, reusable sink heat, which they use for energy generation, and so on and so forth. Essentially, green steel play. The government is obviously looking at reducing energy consumption of steel manufacturing, making it green energy, reducing the pollutant outflow in the air, and so on and so forth. The industry, of course, wants less compliance, right? Ease of manufacturing, lowering harmful emissions while also balancing it. So that's what's happening. There's a debate of sorts happening between the manufacturers and the regulators. There's an error in calculation. So these people say that carbon reduction targets, right, they are erroneous. The calculations are erroneous, right? They flag some discrepancies. And they say current goals were proposed in June. Projects with similar configurations were seen to have widely varying targets. So this obviously happens when the government is evolving. Oh, I'm so sorry about that, folks. When the regulations are evolving and the regulations are changing. So if you've been following, you know how they've been changing or how they've been evolving the steel manufacturing regulations, right? Especially from that green angle, right? And all of that thing leads to differences of opinions when it comes to calculating where the money goes, and that's exactly what's happening. So let's see what happens, right? CRAM, uh, carbon border adjustment mechanism. Roughly 45 of India's steel goes to European Union. Moving on, folks. ARCs seek relief from multi-state loan registration. ARCs are asset reconstruction companies. Asset reconstruction companies, what they do is they play in the stressed assets play. Okay, stressed assets game. So stressed assets is basically a company which took a loan and then it went down, right? So the loan it took was, let's say, 70,000 crores. It came down to 17,000 crores. So these asset reconstruction companies essentially buys these stressed assets, try to turn them around, try to find buyers of piece by piece selling of these stressed assets and extracting value. It's a very, very lucrative banking play. Stressed assets, very lucrative, right? So they talk about recoveries on the dollar, like 20 cents on the dollar, 10 cents on the dollar, 5 cents on the dollar, 50 cents on the dollar, and so on and so forth. And that is a very, very good business for banks. You know how I know? I was actually watching Mr. Chetan Bhagat's video on his journey. So he used to be a very, very good banker in Hong Kong, right? He worked and then he got shifted to this particular stressed assets game. So he had a very successful banking career, and he talked a lot about all the nitty gritties of this career. You should watch his videos, those particular kind of like LBO in PE space. No, 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 no. LBO is very different. LBO essentially is when you are expanding, right? So you do a leverage buyout by make taking a debt on the acquirees balance sheets so that you can expand your operations. So that is very different from stressed assets, which is essentially buying an asset which is essentially dead, right? And then you try to bring it around and you try to juice out the maximum value from it and then make a buck. So it's very, very different. Mr. Peeyush Sethi. Moving on, folks. Tomato prices have soared 50% in 15 days due to excess October rains. Tomato inflation has hit 50%. So while food inflation goes down, we discussed yesterday about pulses and now we're talking about tomatoes. It's not very simple. Food is not simple, right? There's a lot of complications when it comes to different commodities, tomatoes, pulses, and so on and so forth. If you remember, this tomato crisis also happened a couple of years ago. Like 3 years ago, tomato prices ran up 200%, right? Tomato as a crop is as a crop as a harvest is very, very fragile in nature. It's very perishable. It's fragile. It's very susceptible to damage due to water, which is exactly what happened due to monsoon slight delay, right? So while monsoon was good for the rest of the crops in India, we had a very healthy monsoon this year. Tomatoes turned out to be the rare casualty, and that's what's happening. Let's see how this particular play is managed, right? Uh, the demand is great. That's okay. Moving on, folks. Adani sells 13% in AWL Agri to Wilmar. Adani Wilmar. Adani pairing its debt in the commodity play. Adani also tried the whole consumer play, but it chose to not pursue it any further. Right? It tells you how these different conglomerates view their strengths and weaknesses. While Reliance and while Tata, they're looking very, very deeply at the consumption economy. I'm talking about FMCGs and so on and so forth. Adani has not touched that play, right? So while Adani's focus has been on ports, airports, infrastructure majorly, right? Real estate, you can say that. Not consumers. Not consumers, folks. Moving on. Soon, restaurants may get to know their customers better. After decade-long dispute, food delivery apps look to share data with eateries. So I've always told you the food delivery business, when you look at a restaurant business looks very healthy from the outset, right? You're looking at it and you're like, hey, this dish for $100, man, how much must this dish have cost to make? $20. So they're charging an 80% markup. That's very healthy. Everybody dreams of starting a restaurant because of the healthy gross margins, or the apparent healthy gross margins, right? But restaurant business is anything but healthy. Restaurant has the highest mortality amongst the commodity retail, right? So if you look at just your colony, if you're living in a colony, I'm not talking about societies because they don't have an active market, but if you look at colonies, right? Uh, Old colonies, you're looking at shops, right? The general stores, the clothing stores, and so on and so forth. All these shops, they're gonna be very, very old, but there's not gonna be an old restaurant, because restaurants have a mortality of like 18 months. Like most of 90% of restaurants just keep churning. The business looks pretty from the outset, but it's very difficult. There's a lot of leakages. There are a lot. Restaurant businesses, as Nassim Taleb says, is a way to lose money slowly. So you lose money slowly. You start a restaurant, and then it loses money month on month, and you think that you're going to turn it around, you're going to turn it around, you're going to turn it around. Then you turn it around at one point, right? But then it starts losing money again, and then you're out of business in 2 years. So that's what the restaurant business looks like. And it became even worse when it came to food delivery companies. So instead of making it good for them, these people took out all their margins. The only thing, right, they which was good in the restaurant business was the margin, the gross margin. That sort of solved all problems for the restaurants. What these people did was they took 30% of the margin on the delivery, and then 20% on marketing. So you have to pay the delivery margin, of course, but without the marketing spend, which is about 20%, 25% of revenue, you won't get any orders, right? And if you don't get any orders, you're done, right? So they took 50 to 60% of margins away, which essentially led to no margins. So now the restaurant operates at a light speed, pace while losing money. So that's what these food delivery guys did, and they also didn't share the data with those people. So you were talking to a ghost, right? You are sending your food to ghosts, and there's nothing. There's nothing. So they made the business very, very shitty. But now, it's gonna get reinvented. The whole ONDC play and the whole Rapido subscription model instead of the commission model, and so on and so forth. So these people are trying to change their ways. Too little, too late? Let's find out. Mr. Tushar Tiwari writes, there are like 5% of restaurants that I see older than 5 years. I see almost all restaurants shut down, which just started after COVID. Yeah, you're right. You're right. This is what's calling observing the reality in a bit deeper sense. A lot of people don't observe things like that, They're very, let's say, superficial when it comes to their observations and analysis. It helps. It helps to go deeper. That's what I've realized. Right? Moving on, folks. Senior living, a golden period begins for developers on rising NRI interest. Higher incomes, demographic shifts draw investors from countries like US, UK, Canada, and so on. So a lot of senior living happening in places like Kerala. Kerala has a lot of population outside in the Gulf and so on and so forth. So they are building homes. Building homes, by the way, in Kerala is a very, very big market. So a lot of startups. My friend has a startup called Colo. Colo is essentially, it began as a social network for getting home designs based out of Kerala. So that's how big Kerala is when it comes to home designs and home constructions and, all of those things like home interior decoration and so on and so forth. Now, senior living is also heavy in Kerala. Of course, some other places as well, like Bangalore, Hyderabad, even Delhi NCR, right? This is witnessing a growth in investments as far as senior living is considered. Are you surprised, folks? Of course not. Of course not. Bajaj Auto has completed its key stake buy in KTM. Ashok Leland has tied up with Famco Qatar to strengthen its presence in the country. Speaking of presence, folks, Nelson, the market research company, if you're not familiar with the market research business and industry, there's Nelson, there's IMRB, there's Ipsos, right? These people are the top, and there's Hansa Research in India. So India has Hansa. Hansa is an Indian market research giant. So let's say if you're talking about big four of market research, it'll be Nelson, it'll be IMRB, it'll be Ipsos, and it'll be Hansa. So these four companies. Nelson there were rumors that they might get into the TV rating ecosystem along with Bach, right? But that's not happening. Nelson is not going for TV ratings ecosystem. It says research company continues to strengthen its presence here as a global innovation hub, right? In February, Nelson had tied up with Jio Hotstar to provide India's first independent digital ad measurement for IPL, right? But it's not going forward with what is called the TV ratings play. We've talked a lot about how TV ratings are measured, right? Viewers of Thinkers Frequency know how TV ratings are measured. Very interesting. Very interesting. Nelson is not going to go there. Moving on, folks. New age CXOs steal the show as far as making money is considered. Mr. Yashish Daya, the founder and CEO of Policy Bazaar, he made 641 crores last year. 641 crores. However, most of it came from 638 crore came from exercise stock options, of course. Mr. Alok Bansal, he's also from Policy Bazaar. He's the one of the founding members, co-founder. 247 crores and so on and so forth. I don't know why do these people share these numbers with us, right? And why did I share them with you? To make you feel poor? Just because I felt poor? Was it some pervert delight? Is there some Freudian mystery here which is going on? Why did these people write these numbers? Why did I read these numbers? And why did I say these numbers to you? And when you've heard that Mr. Yashish Daya made 642 crores last year, why would you share this information with somebody else? What? Do you get the psychological, there has to be, Freud must have written something about it. Envy, I guess. Anyway, SpiceJet has paid 442 crores. SpiceJet has paid 442 crore debt via Carlyle deal. So 50 million debt, Carlyle has been given the equity play. Completed the allotment of equity shares to Carlyle Aviation Partners, helping the airline wipe $50 million in debt. Right? $50 million. Moving on, folks. India seeks, SpiceJet is still in trouble, by the way. The troubles don't go away with $50 million for SpiceJet for now. So let's wish them luck. Right? But how can you wish an airline luck, right? Luck doesn't save airlines, unfortunately. Money does, and airlines just lose a lot of money very, very quickly, right? Unfortunately. 1 second, folks. I get very uncomfortable with my hair. Oh my god. Yeah, okay. Let's move on. So India seeks ships for West Asia oil as Russia sanctions near November 21. A lot of spike in tanker bookings from signals refiners shifting to Gulf suppliers ahead of curbs on Rosneft and Lukoil. So Russian sanctions actually working. US sanctions actually working in India, for India, for Russia-India trade. Let's see how this development shapes up. As a response to this problem, Russia had said that they're going to help India with shipbuilding, right? Because Russia has to feed the monkey. Russia needs the money. The money has to come from somewhere, and India will have to help Russia make that money somehow, anyhow. The question is, how will that transpire once these sanctions have hit, right? Because then the Donald Trump prediction will once again come to be right. He said, once you make India stop buying oil from Russia, once you make China stop buying oil from Russia, the war will instantly stop. And, we want the war to stop, but we don't want US to bully Russia successfully, right? We don't want that. So very complicated. Let's see what happens. Moving on, folks. There's a lot of talk about privacy. There's a lot of talk about DP rules, raising compliance bar for AI firms, right? Nobody wants to regulate AI. We've talked a lot about that. NPCI ups vigil on third-party apps as it tightens scrutiny on fintechs. Right now, some 30 UPI third-party apps have gotten the NPCI license. Right now, they've upped the vigilance on these third-party apps because frauds are happening a lot. Right, so they want to be sure about that. Heightened background verifications for new entrants before going live on UPI platforms. Let's see how that plays out. Moving on, folks. Video generation company Luma AI bags 900 million at valuation of $4 billion. 900 million. They've raised like 8,000 crore rupees, right? Very young, not making money. They're gonna what's their role going to be on the internet? They're just gonna spam the internet with shitty videos, with AI made videos, right? And for that they got 900 million. Good for them, folks. Good for them. Speaking of money, AgroStar seems to have raised money. Agri-tech startup AgroStar has raised $30 million. $30 million. AgroStar. Omni-channel expansion, product innovation, developing artificial intelligence capabilities. Founded in 2013, the company leverages data and technology to provide quality agri inputs to farmers. Well, seems to be better. There is a good news for Elevation Capital. They've sold 2% stake in Paytm via 1500 crore bulk deal. Elevation didn't sell after the IPO in 2021. This is the first time they're pairing their stake in Paytm. 1500 crores, right? They've netted. It'd be nice for that money to come here, right? What would I want? Elevation's money from Elevation to come here, to come to me. Let's see what happens there. Moving on, folks. India AI Access boosts new compute providers in its fourth GPU tender round. 5 new compute providers showing interest in the pre-bid process. Well, no news there. Moving on, folks. Cisco seeing an opening in India manufacturing push. Company finds significant traction with manufacturing emerging as key vertical. Well. Moving on. Nvidia earnings, we've discussed that. Nasdaq and S&P led index rise, right? And Nvidia earnings have come out. So this is old, of course. This was published last night. They're good. So Nvidia stock, let me look at Nvidia stock right now. Nvidia share price. It's come up about 2.85%, right? Still down, 5 days, 2.5%. 1 month, 2% rise. From the peak, still low, about 10 to 12%. But the stock has gone up, right? Moving on, folks. Teneo Clean Air has listed 27.2 premium. This is the company which has 90% imports coming from China, right? So while they say they are making clean air products and so on and so forth, they're essentially Chinese manufacturing. Sometimes I feel Nishant is doing money manifestation on a live stream. When that money needs to come here, Mr. Tiwari. It is very important. So manifestation, affirmation, whatever is the science behind it, or let's say the concept behind it, I need to do it. Need the money, gotta feed the monkey, as it says, as the Big Lebowski said. Moving on, folks. We've talked about economists backing the December rate cut. You know what the chairman of SEBI has to say, Mr. Tuhin Kanta Pandey? Not everyone has to agree with the company's valuation. They have the choice to reject IPO. Well, what he doesn't say is that the IPO participation has a loophole, right? It's basically these investment bankers which sell these IPOs to these funds who invariably, indirectly lead public participation in them, right? So all the IPO market is definitely very heavily rigged. And if that rigging is not addressed, right, it's just fugazi, right? I mean, of course, not everybody needs to jump on the gun as far as IPOs are considered. But what do you do when investment bankers essentially, unmistakably, bundle these together and everybody ends up buying them, right? So that is, this is a conflict of interest situation which hasn't been addressed so nicely. But not everything rests on their shoulders. If the market essentially has cartelized in that way, sometimes there's nothing you can do about it. I'll say it again. If the market has cartelized, right, there's nothing you can do about it. What do? You go past these bankers to buy the IPOs directly? No, you can't do that. IPOs are structured in a way that they're brought to the investment markets like the mutual funds and so on. So institutional investments through these brokers. So they have some say in what gets bought and how, right? And if that is the case, there will be some sort of asymmetry as far as fairness is concerned. And what's fair? Who knows what's fair? Moving on, folks. Former US Secretary Summers quits from OpenAI board. Very weird situation happening with the OpenAI. Moving on. MOUs worth 270 billion are being signed. Trump at Saudi summit. You know what had happened? Speaking of Saudis, folks, the Abu Dhabi guys, the UAE guys, they had bought, they had tripled their Bitcoin buys, right? Just before this crash happened. So they tripled their buys, and now Bitcoin has risen 1.25%. It's down 3.5%. In the last month, it's down 15%. In 6 months, it's down 10%. 1 year, it's where it was 1 year ago. So they tripled it, and they lost all the money. Abu Dhabi Fund. The firm increased its holding in BlackRock's iShare Bitcoin Trust to almost 8 million shares as of September 13. Moving on, folks. Quality issues. Regulator looks to tighten marketing and sale of drugs. Nobody should be surprised at that. That is a developing story, and that is going to be a developing story for a couple of months, right? And then it's gonna die down. Right? That's what happens with these stories like that. These people, you know, how this is structured is that the manufacturers do all sorts of shady practices. They and the babus in conjunction, they do a lot of shady stuff. Babus make a lot of money, the black money, right? As soon as something bad happens, everybody warms up, everybody becomes very vigilant. Some namesake, some symbolic closures and shutdowns happen, and then things dry out, and then people get back to their old ways. That's how it's happened in India. That's exactly what's looking like it's going to happen in India. But for now, the developing story is regulator looks to tighten marketing and sale of drugs. Plans new provisions that mandate licensing before distribution to make entities accountable. Well, no surprise there. Moving on, folks. SATCOM rules are facing another, flux. Earlier they capped the users, right? They said that there's going to be a cap at the user level. You can't sell to more number of users than that. They've struck that down. They're saying the cap is going to be at the capacity level, and after the capacity, new renewals and new expansion, all of those things, approvals will have to be taken after that capacity limit is breached, right? So one Spectrum at 5% of AGR rejects Digital Bharat Nidhi subsidy scheme for SATCOM terminal. DOT writes SATCOM rules, cap on capacity, not users. This is a very good news for the SATCOM players. Bad news for telcos. Let's see what happens. This is how the telcos are ceding ground to the SATCOM players. The good thing is that they are hedged. Move on, folks. Police have busted a $250 million cyber ransom plot against Hetero, right? They used fake IDs, forged papers, and posed as US FDA to intimidate drug companies. When the government and regulators don't do well, right? Thieves come in the way. Thieves, essentially, right? Heist guys. They do the job of the regulators. They do the job of what these heist guys were doing was posing as US FDA guys and seeking ransom money from these companies. It's amazing, man. Hats off to these guys. Do you like this? I mean, I like this. I love this, man. I love this. I love their passion, right? They were doing the God's work. Moving on, folks. So they were like indirectly forcing compliance for these manufacturers. It's amazing. It's absolutely beautiful. Moving on, folks. Value picks hard to come by on a street full of stretched valuations, says a report. Value pickers are increasingly struggling to spot winners in India as valuations of companies are tilting heavy towards the higher end, according to a DSP Mutual Fund study. Well, no shit, Sherlock. Thank you for nothing. Thank you for nothing. Moving on, folks. That is it. We've covered everything, folks. A lot of it, long and short of it. I hope you had fun. I hope this added value to you. It definitely added a lot of value to me. I learned a lot. And some of my predictions came true. Made me very happy. Hope it helped you. I should thank Mr. Sumanth Kumar, Mr. Peeyush Sethi, Mr. Tushar Tiwari, and everybody else who joined, right? Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in, comes to an end. It's 9:07. We should punch in anytime. I wish you a beautiful day personally and professionally. And I'll see you tomorrow, same place, same time, hopefully. Please take care. Bye bye.